Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So although the technical picture mostly stands the same through the week, so actually this is the well-known picture that we discussed already a few times. On the fundamental background, a lot of interesting things have happened in the recent week and actually within the recent 2 weeks. So markets are going in habit with a new environment, this new overall context on the market, overall common view that inflationary fears are not very strong, and investors currently anticipate and foretaste the weakness of the United States dollar and interest rates by many reasons actually. So some moments we have mentioned in our fundamental report this week, and in general I would suggest that you would read the fundamental report because you will better understand actually the fundamental background and how it corresponds to our longer term view. Initially, when the dollar just has started to rally here in with this downward action, we were a bit confused with that because the overall upward action started too early, as we have long-term target, and we suggested initially that it should happen later. And that was a bit frustrating, and it's difficult to explain why this happens. But currently everything is turning back to its own sense, and the anticipation of another downward action on the dollar and the drop on interest rates perfectly corresponds to normal technical behavior on the markets and corresponds to the current stage of the economy cycle. As you know, market currently is turning to the first cycle of the growth that calls non-inflationary growth, when the interest rates might go up together with the interest with the stock market. And the major background reasons for this growth stands in the economy recovery, not in inflation, but just on the background of the recovery. And I just bring you two examples of the market anticipation. For example, ING Bank expects the returning of the dollar and expect the lows around 89, while we expect 87.4, the new lows, while Mizuho Bank, they tell that within the 3 months in the nearest quarter, they expect downside continuation and pressure as on the interest rates as on the United States dollar. That perfectly corresponds to our view and bring confidence to the market that overall expectation, overall environment stands mutual, and investors are aimed on this direction. So currently, turning back to the technical background, we still have some few tricky moments. Mostly they stand on the weekly chart. So first of all, on the weekly chart, we have the shape of the head and shoulders, direct head and shoulders pattern, and we have incompleted 116 target, that is XOP. And as multiple scenarios exist, what could happen around. So currently the reaching of the XOP looks not very probable, although some scenarios exist when it could happen. But currently the more probable scenarios suggest either direct upward continuation up from here, or our central scenario with the head and shoulders. So we consider both of them currently. We do not consider drop to the 116 this week, just because it stands deep outside of the daily average sold, and hardly it will be completed within just 1 week. It is not time yet to talk about it. We could talk about it only if market will break 118 area, erase our head and shoulders, and drop below 118 might become the first hint that maybe 116 target still will be reached. But this probably will happen not in the coming week. So with the first scenario, upward direct breakout, this is a bit worse scenario for us, just because it makes it a bit more difficult the way to take the position. Because if you imagine that market is coming higher, where to take the position on some minor bounce probably, So from that standpoint, this broken confluence area might be very important, because when the market breaks the confluence without any response, and in the case of the direct upward continuation, that particularly will be this situation where confluence has been broken without any respect. Very often, I would say, as a rule, market at some point turning down and retest the broken confluence. That might be the chance to us taking a long position. That only in case of the direct upward breakout. If next week market just will keep going higher, maybe we'll reach the 21 area, then starts retracement. In this case, we're watching for 1956, 120 area where we could consider taking the long position. Alternatively, with our major scenario, this is everything clear. We're just watching for 1850. We do not intend to go short right from here. That's why we're not really very interested where the market will start downward action right from here, and in what manner this will happen, what patterns will be formed. That's not interesting to us. For us, it's important just to see market around 1850, where we could consider taking the long position. That's primary scenario for euro currency on the daily chart that we intend to keep an eye on. What is also important for this head and shoulders is that it might be the background for starting action to the 126, 128 target. If we are correct on the dollar target, I mean dollar index, then corresponding targets on the euro is approximately 126, 128 area. So, and it could start right from this head and shoulders. So that might become the background and starting point of some significant upward action. And third moment, as I said, keep an eye on the bottom of the right arm. As usual, we use head and shoulders only, not only as a directional pattern, direct pattern, or also using it as an indicator. And in case of the failure, if market fails to hold above the right arm, starts dropping lower, moving below 118, it tells you the head and shoulders is failing. And in this case, we start to keep an eye on 116. So in this case, 116 will get the chance to be reached by the price action. But currently we are not considering this scenario by far. On the intraday charts, as I said, it's not very important how market will start downward reversal for the daily time frame. But if you trade on hourly chart, it might be important if you plan to take the short position. Well, currently, guys, we have some hints on the bearish on the reversal, but they're actually not very strong by far. So what we have, first of all, some kind of the divergences forming here. Second, we have minor, very small wash and rinse with the previous top right here as well. And potentially, well, theoretically, it might be kind of the double top or something of that sort. Wash and rinses on the second top is very typical for the double top patterns. But currently, well, I would wait a bit more to get the more evident on the reversal. So this is a bit tricky situation for taking the short position immediately. You could try with the stops above this area, but I would prefer to get a bit more clear signs of the reversal. If you would like to take the risk, at least reduce your trading volume. Take position with a small volume. So, and we also will be keep an eye on this potential reversal, but mostly just to clarify whether the market is forming head and shoulders or it's just going higher. So that's why we're interested with that. So that's what we have on the euro currency. It seems that coming couple of months will be very interesting on the euro, especially if we will get it right and if indeed market is coming to the 126.28 area. So that should provide a lot of trading opportunities.